Okay, so the live thing's not working, so I'm gonna do a recorded stream, right? And it's my internet on my laptop. That's what it is. This is a older laptop that I only use for DJing. It does what it does okay, but it's not really meant for this. We're gonna do it right here, right now. All right, but this time I'm recording it. We're not going live. It is what it is. All right, so we're talking about how trickle down economics can't work, not in today's modern economy. And I went through the thought experiment of you get $1 billion after all your expenses, and why it's so hard for most people to spend even a portion of that, let alone actually, doing something decent with it, and why businesses who are making, tens of millions to hundreds of millions every year, some of them making billions, Amazon, shouldn't have done that. Why trickle down doesn't work? Because they can't spend that money back anywhere near as fast as they can make it, and why they would have to raise wages on a reasonable level, and that technically upsets the balance of the economics and would have adverse impacts on other things in the area. So we'll get into this. Why it's not a fault of wages, but a fault of taxes. Okay, so we're gonna get there. So you got $1 billion, and I already started going over this in the live feed. So let's say you bought a $10 million house down in the Florida Keys or the Bahamas or something, a mansion. You hire your groundskeepers, your accountants, your maids, people to keep the house clean. You've done your background checks on all of them through your lawyer. He's done all the background checks, so he's paying for all that. You're paying for your lawyers, of course. And now when you start buying houses in other places, because let's face it, we're going to buy houses in other places. We got $1 billion. We're going to travel the world. We want to own some property around the world and kind of show off. Maybe you buy a castle, which ironically, castles are way more affordable than you'd think. You can get some of them for like $2.5 million for a pretty actually decent interior looking, and it's a castle. But let's say we get one of the nicer castles, so we'll go 15 million there. So at best, just between our mansion, our castle, maybe a beautiful condo and a skyscraper penthouse or something in New York, we get a place in Beijing, we get a place some maybe in Seoul, one in Kyoto, wherever you want to go. So we build we buy a couple of just extravagant things. We spend quite a bit of money on here. Let's take this. Let's say we spend $30 million just on property around the world. That's still $970 million to go. So you think 30 million is a lot until you realize you've already bought some of the fundamental things that you're going to have the rest of your life unless you decide to sell it, in which case your property value may go up and you end up making money on these really crazy properties. So you're actually your property becomes an investment. So you're not losing money on these. You're kind of putting money into a real estate account is how real estate is kind of looked at for a lot of things. People don't really realize this a lot of the times. They just think of a home as a different way of owning something. They don't really realize that it holds value, and if you want to move or you want to leave that or sell it, that value stays with it. Okay, so you spent technically $30 million, but now you have $30 million in assets. So you still technically have that money, depending on how, of course, property value and everything does. Okay, so we're down to $970 million. So let's get a little ridiculous, right? Let's be fun. Let's say you want to collect cars. You guys into cars? I'm into cars. A little bit, not a lot of it. I really enjoy looking at cars. I enjoy, I just admire cars. Let's put it that way. So for me, one of my first loves was a Thunderbird, like a 57 Thunderbird. So I find somebody who's got a 57 Chevy Thunderbird, mint condition, or maybe even not. Let's go with not. but I want to hire, one of these TV type crews to restore this. So I'm going to pay the restoration fees, and even then, that's only going to be like maybe $35,000 to $40,000 vehicle, depending on how tricked out I want it to be. So it's actually not that much money. It's a pittance in our scale. Then one of my other loves from when I was in high school was McLaren F1 supercar. McLaren makes some of the most beautiful cars. They're just sleek, sexy, powerful. So I'm gonna buy me a McLaren F1 supercar. Alright, that's about, let's say, $2.5 million. Then of course, every kid in the 90s, every guy who liked cars in the 90s wants a Lamborghini Countach or a Diablo, one of these cars. I'm not even sure what their new lines are, but let's get a Lambo, right? Or let's buy let's say we're gonna buy 20 different cars, all in these same basic kind of sports car themes, classic car themes. So we're gonna allocate $20 million for that. So now we're down to $950 million. We've got a ton of cars to drive around, our pick, and maybe we don't actually drive those. Maybe we have an Audi or something or a Bentley. It's a nice SUV caddy or something that we drive around. We get one for the wife, one for our. I got 4 daughters, so let's say I buy one for each of my kids. Even if they can't drive yet, they're getting one when they turn of age. So we'll set aside money for that. $40,000, $50,000 vehicles. So at best, we're spending $200,000 on $240,000 on those vehicles, maybe $300,000. So that's so we're at let's say $47 million. So we've got a bunch of vehicles, a bunch of houses. Well, shoot, what do we do now? Well, we have to furnish them. So we deck everything out. We spend another couple of $1 million on furnishings. Even if you go crazy, honestly, you can't really spend as much money as you would think in furnishings. And here's the problem. Here's one of the parts of the problem. Let's say we got money, so we want our money's worth, right? Well, when you start getting into value products, something where you're dealing with the handcrafted products, something that's built really, really well, and it's done by artisans and craftsmen that are at the top of their class. You're not looking at these big manufacturers where they're employing tens of thousands of people across different places. You're buying them from like Kmart or Walmart, or you're not buying them from people who have these massive numbers of employees, these mass production, mass retail. You're buying from very strict settings where people only have so much money. All right. So you're spending more money, but you're spending to a specific group of people, and even those people, they make good money, but then they're doing something like that in trade where they're only buying specific qualities. So that money kind of circulates up here, while everybody else, the majority of the population, is still down here. So if we keep spending the money up here, it's not trickling down yet, right? So we run into this caveat where once we have so much money, the quality of what we want to spend on exists only in this upper realm, and it doesn't exist here. So how do we get the money to trickle down here? Is me up here spending it on this guy going to trickle it down here? Not usually, honestly. Once it hits a certain spot, it kind of spins around and around and around, and it never really gets all the way down here. It goes sometimes back up because these guys are going to try to get to our level, the billionaire class or the multimillionaire class, and maybe they're in the low, early millions. And they're comfortable with that. They're going to stay there. That's fine. That $1 million gap is where people tend to either set or they'll explode. They'll come into or they'll completely fail and drop down to the bottom. Our middle class doesn't truly exist anymore. There's so few people that exist within a middle class perspective that it's a serious issue. And It's a problem because in trickle down economics, you needed a stronger middle class, a much larger middle class, for trickle down to actually work. And those middle class people, those were your early white collar workers that these really rich people, they depended on for a lot of things, and they're not making enough money to be spending all their money up here. But they can spend their money here a lot. They don't spend money at their level because their level is management. Their level doesn't make anything. Their level is not providing services to other people at that level. So they're providing services to here, while running people here and purchasing things. And maybe they save up a little bit and purchase something here, but a lot of times they're buying things from this general area a lot. That's the majority of where they consume. So that's where we need to work with trickle down economics, is how we consume that money, how we who consumes that money, and where that money goes to, and how it distributes down, right? So let's keep spending our money. We got billions to deal with, right? We're not worried about those guys yet. But we have our house, we have cars, we've employed a handful of people, right? We've done our job trickling down. We've employed a bunch of people who live in those areas, right? Or at least close enough to those areas, who pass background checks. They're doing okay themselves. Okay, if we're spending $60,000 a year on them, they're not quite blue collar anymore. And that's just our bare. We got, of course, the head groundskeeper, who's probably going to make $80,000 to $100,000 a year or more. The maid who's going to be in charge of the rest of them. So she's going to make a little bit more. Things of that nature, lawyers and such. But all these people, because we're dealing with so much money, we're keeping them up here. We're hiring the people who are in this area. We're not hiring these people. We're hiring these people. Now, if you want to be that person who trickles it down that far right away, and you want to hire, your local Donald or something, and say, hey, Tim, I know I changed Donald to Tim. That's how shifty he is. We don't know him. But we're going to hire Tim, and we're going to say, hey, Tim, we're going to give you $100,000 to be a groundskeeper. I know you're not really experienced, but you mow some lawns around the neighborhood pretty good. We're going to give you a shot. Now, one, your lawn's going to suck. You're going to probably have a lot of bald spots, burn spots. These guys don't necessarily know what they're doing. They haven't invested their time into the sciences of it. You want your money's worth. You start spending your money on the people who have invested the time and the effort into becoming an expert and a professional at their job. They're going to answer when something goes wrong, honestly. They're going to do their best, honestly, to get it done. So you can't hire at this stuff anymore. You just can't. Not unless you want to spend 10 times as much doing it, and you don't, and you won't. Okay? So let's just be honest with that. So how do we do something? Well, we've furnished our apartments, our homes. So we've got all the stuff. We bought our, and in furnishings, I'm including, of course, televisions, video games, all those extravagant electronics. Of course, maybe you got let's buy a yacht or two, right? You got to have a yacht. We'll do some vacations. So we'll spend, a couple $1 million on some vacations. Let's bring us all the way down to $900 million. We've done all of our vacationing, our traveling. We've purchased our yachts and our boats, and we furnished everything to Kingdom Come. We've tricked out our vehicles. We've built a custom garage on our mansion so that we can, put all these cars in here. As a small car museum that nobody but our friends and family will ever get to see. But it's ours. We want to own something. We want to have that. And that's our right. And it's absolutely our right. And it's an American dream to own these things. So we've got all. Now we're down to $900 million. We spent 1/10 of $1 billion, and we've got almost everything we could really ever want. We've bought, maybe a crazy old baseball card. We've bought, collector's items, stuff that was really important to us. But because those are such rare commodities and the market isn't high enough for them, because you just don't have enough people interested in them that can afford that, the prices come down in collectibles and antiques. So you can buy a lot of stuff for, once you got $1 billion, it seems a pittance of money. So we're down to $900 million. We've bought pretty much everything we can. Now you might say, well, there's taxes, and of course your constantly paying your accountants, your lawyers. So you've got all that going on. But you're making interest on your bank accounts. Okay? So just by having money in the banks, you're making more money than most people honestly make in a year. All right? It's fucking crazy, right? Once you have so much money, you literally make more money than most people would make in a year just by having your money in a bank. Just by sitting around and enjoying your life, you're making so much money that you can pay all your taxes, pay all your people, and still be making money on interest. But we're going to go further than this, right? Because we don't want to just make our $100 million back, and we're investing people. We're going to try and trickle it down. We're going to do our best to trickle it down. So let's do this. Let's try and trickle it down. We're going to buy some stocks. We're going to buy some stocks to try to own some businesses. Okay, so we just buy a handful of stocks. Now, we don't have enough to buy out Nike or buy out Adidas or anything like this, but we're going to get a stockbroker, and he's going to invest, let's say we're going to put $100 million out there just to be psycho. And we're going to do some stocks that are definitely going to make constant money. They're safe stocks like Nike and Adidas. They're not going to go anywhere. It's just good to have that money in a safe place. And then we do some high yield stocks where the risk is high, but if good things happen with that business, we make a lot of money. And of course, then our broker sells it and maybe trashes that business, but we don't care because we're making money. So our broker's making us money on those stocks. And at $100 million in stocks, there's so much shuffling that you can do that unless you hire a really incompetent broker, you're making money. You're not losing it, okay? Once you have enough money, losing that money becomes really hard. Not making money with it becomes really hard, okay? And so we own our stocks now. We still have all of this in assets. These are all assets. Very little of it is going to depreciate in value so much that you're not going to make the majority of it back. Okay? But we did lower our interest gain on the money in the banks by spending that money. So, good. Now we're only making interest on $800 million in the bank, right? And we are paying taxes on our stocks, on our stock sales every year. Fortunately, if we're making enough money in those, we're actually going up still, not going down. Okay? Stick with me. Now, we're going to invest back into the people. So let's say, I don't know if you guys are like me, I love the movies. And I think where I live, they have a small movie theater. And there's enough rural communities in the area that travel for movies. I think a movie theater here would be cool. But not just any old movie theater. I think one kind of like the AMC that I went to when I was in New Orleans would be kind of cool. Maybe not as grand and big as that, but still, it's gonna have a game room. We're gonna have a bar attached to it, because I'm from Wisconsin. Our movie theaters need bars, and I don't know why we don't have them. But I'm gonna have the liquor license put in there. I'm gonna get a bar. Only 21 and older can go past the little door, but you're getting a bar in your movie theater. You have to drink in the bar, though. You can't take your drinking to the movie. It is what it is. Down in Louisiana, you absolutely seem to be able to do that. In Wisconsin, I don't know if you can. If you could, I'd have to watch it. But, maybe. Oh, let's get crazy. So we're having a bar. We have a game room. Let's add an arcade inside this thing. So we got, let's say we're gonna do 20 screens in a small, 10,000 person town. And we're gonna have the latest movies. We got a 3D, 2 or 3 3D screens because I don't want all of them to be 3D. Only the newest ones, and that's only on their second screen. So that's technically 6 screens devoted to 3 movies. One of them is going to be 3D, one of them is going to be 2D, because some people, like my wife, hate 3D, and I can respect that. And I've got money to throw away on a notion like this. So we're going to have way more screens than we need, but we're going to have fun with it. Alright, so you got this crazy theater. All of them are going to have top of the line sound, cinematic sound quality. we're going to do full 7.1. We're going to have the top of the line lighting, top of the line everything. Let's say we spend $80 to $90 million on a small town movie screen. We know we're never going to make money on this, but we're going to hire people to run that bar, to clean up the theater, to run all these different projectors. We're creating a lot of jobs in a small community. But we have to pay them wages that are congruent with the community, right? Because after a while, they would have spent all their money in that community, and they'll look to spend all their money outside the community. So we have to keep the wages to a point where they want to spend it back in the community. So we're going to find out what the local, wage average is. And let's say we're going to spend, around here between factories and retail and everything else, we're going to spend maybe $14, $15 an hour per person for your, your starting wages there. And then, of course, the administrative people are going to make $18 to $20 an hour. Not too bad, right? Then we employ, say, maybe 5 to 10 janitors, depending on the night of the week. You're gonna have so probably about a 15 to 20 person janitorial crew altogether, because part-time jobs. You're gonna have your projectionists, you're gonna have your managers, you're gonna have your people who work in the candy counter. You have your bartenders, and then you have to have 1 or 2 people in your game room. So you've created a number of jobs there, right? And you're going to lose money on this, which is actually a good thing, because you're making money everywhere else so far. But you're still making some money on it. But you're only putting out best maybe $300,000 to $400,000 a quarter here. You're already making more than that with everything else you got. So you start off another business. But the problem is, I'm being goofy and putting it in a small town. Most people wouldn't do that. You're going to put it in a town that can actually handle the size. So from where I am, the next biggest town would be a town of about 30 to 40,000 people, and it has a lot of rural and municipal towns around it. So that would make more sense, and that's where the theater would probably go, or to a town the size of maybe Green Bay, Wisconsin, or Appleton, Wisconsin. You're going to do a bigger theater, more extravagant. That's where you're going to do it. You're not going to invest in a small town. So I guess let's be realistic. We've put it there, and we've gone with the median wage. Thing is, there's such a market there for something better, that if something better comes along and the real estate is in a good location, you're getting more and more people from all over to come to that theater for that experience of your theater, and you're making money. But we've managed to trickle down economics to at least another 50 people. How do we get it more? And meanwhile, we're still making money. So how many businesses do you think you can create? How many businesses do you think you can manage to create enough jobs to keep trickling that money down? And I'll be honest with you, it's not ever going to be enough. You can't create enough jobs. Walmart owns so many Walmarts across the states, and people are constantly complaining that they don't pay enough. Amazon, Bezos makes billions of dollars a year, as people get paid, starting wages, I think like $17 an hour or something like that. Or it's pretty good from what I understand. But with the working conditions and everything else, but the demands of the job are what they are to get the product that pays for the wages. So do they hire more people? What do they do? Because they can only have so many people. They can only do things in so many different ways to try to make it easier on the people, while still trying to deliver their service on time to make good on their customer promises. So they have to work on the logistics. So they tend to hire more logistics managers. Up there again, right? They cannot make enough jobs to trickle it down. It's literally impossible. And the problem, I mentioned stocks in the live portion. I didn't mention them here too much yet, other than what we were going to buy. And the problem is, when you have a very successful company like these people do, they have stockholders. for their company to keep going, for them to be able to keep employing these people, they have to constantly return good dividends on their stocks. Their stocks have to continuously improve by a certain margin at least, to keep people invested in their stock. To offset some of this, they've been selling stocks to their people in a 401k, so that their personnel are always investors, and they're still having a stock performance and sales rate that way. But getting new interest in your stocks, getting other investors to want to invest in your stocks is very, very difficult, because unless your stocks are performing really well, nobody wants your stock. They might invest in it as something that's going to be a safe stock, that's not going to lose value easily. So if I want, to give my kid a present in 20 years, I invest in your company. In 20 years time, it's maintained a value with the cost of living or something, and so technically it's worth more, but it's not really worth any more percentage wise to the company. All right, so that's safe investment stocks right there. But the company has to constantly show that it's going to do okay by those stocks, because if it doesn't, if those stocks start to perform weak, the company performs weak for a couple of quarters, not as strong, changing your stocks positively, then people tend to start selling those stocks. And the problem with everybody selling the stock is it becomes worthless. When your company becomes worthless in the stock market, it can destroy your company. Okay, so that becomes an issue. Thank you. So you can't risk your company becoming worthless, because then everybody who works for your company loses their job potentially. So we can't have that. So you have to constantly have some kind of good stock performance, so that you can keep all those people employed. And to do that, you have to have better returns every quarter. That means you have to reduce your expenditures, reduce your expenses, your overall costs and fees. You reduce your overhead, and you have to make more money. Your net gains have to be stronger than they were the last time. And that's your gross, because your stock people don't care about your gross. I'm investing your money. I don't care what you made before all your expenses. I care what you made after your expenses. So they have to reduce sometimes how many people they're paying, or what their wage expenses are, or what they're spending on things like repairs, maintenance. If you can reduce those fees while increasing how much you sold each quarter to the whatever your market is, those people are purchasing your stuff. So this is where stocks have an inherent evil into it. They were a good idea in the very beginning, because they were a way for people to invest into your business and to get a reward for investing into your business by having a say in your business, or by being able to sell their share of your business and get money for it because your business performed well. But unfortunately, it didn't maintain that system. It's lost that integrity. It's lost that value. Stocks is now just a high-stakes gambling game for people who can really afford the money to buy enough stocks in anything for it to either take off and do well for them to sell out, or seize control of. It's really become somewhat of a nightmare of a situation in stock market, right? But this is what companies like Walmart, Amazon, Kmart, I guess not Kmart so much anymore, right? And part of their thing was stocks. But a lot of these companies, that's what they deal with on a daily basis. They're trying to keep those stocks up so that people can stay employed in their business, because they want to keep giving you that job. They want to keep everybody making money, and they want to keep making money, but they can only make money if they have you. And they know that, and they're trying to do their best by the workers, but they also have to do the best by their stock owners, because if their stock owners sell out and destroys their business, then everybody's out. So it's a delicate balance, and this is where stock damages trickle down economics, because the people at the top who own all these stocks, who have all these controls, they can really screw how everybody's seeing and doing things. These companies cannot spend enough money on workers. They cannot spend enough money on they can't spend enough money on anything to really trickle the money down. That's why the responsibility for proper trickle down cannot be on the people anymore. We can't rely on a trickle down system. We have to rely on a proper taxation system that we had actually a number of years ago, where the tax rates on people went up. What it became was almost a limiter or a ceiling on profitability, net gains for individuals, not businesses, but the individuals themselves. If you were in the business, you could still spend that money in the business, reduce the net gain by creating more expenses, by investing. That's not what's going on right now a lot of times, unfortunately. There's still a lot of investing, but when you're making hundreds of millions and billions, it's hard to continue that investment year in, year out, intellectually, because otherwise you're just making complete straight losses, and that's not a good idea either. You don't want to throw your money at the wall and hope it sticks, because it's money and it doesn't do that. That's spaghetti. You can't spend that. Okay, so it becomes a huge issue, and for the government to have those higher taxes, personal taxes on gross amounts of income, I know people are like, "Oh, that's how much money." Then they've earned that money. They did to a degree. Well, once you've earned so much money, when you continue to earn it, you're not really earning it anymore. You're kind of just in that situation where you're gonna get more money, because you just can't not get more money. And the situation just is that you will constantly funnel money up. You're going to constantly be making profits. You're going to constantly be doing this. You're going to constantly be gaining interest on your investments. So it's just the situation. So to tax those people, which is what they used to do a number of decades ago, and then what that money didn't go just to the federal government. It was a combination of both state and federal taxes, and for them to get those funds, that's how we got these good highway departments. That's how we had all the great roads, the great bus systems, the great rail systems that we had. That's how we had such good robust education, police forces, fire departments. We had a much better system for almost everything. And I don't know if you guys have noticed the trend in the last several decades, but we're constantly cutting costs for our schools. We're constantly cutting costs for our police departments. They're constantly doing fundraisers for every damn thing underneath the sun. Even though somehow everybody else is making more money, these public things that are just inherently things that we need to have for our public to do well, they're struggling. They're struggling more every friggin' year than they were the year previously, because they just don't have the money coming in. Because you can't get adequate taxes from people who aren't making adequate money. And if they're not spending enough money locally, you're not getting the sales taxes from them. If they don't own property in your neck of the woods, you're not getting property taxes for that. And if you're making property tax deals to get them to build a store there, you're not getting taxes from that. So you have to find out, how do I get them to spend money locally? How do I get people to do more local money sales? And that's the caveat. How do we make the money trickle down? You can't make money trickle down, and these people are making so much money that they can't possibly trickle it back down to us. There's bottlenecks that prevent that money from coming back down effectively. You can get some of it back down, but it's not enough to fuel the economy the way it needs to, and sooner or later the economy is going to stall out, because it's an engine. Any form of economics is an engine, and it feeds on itself. And any good scientist will tell you there's no engine that can fuel itself and continue with the exact same strength. Even the best engine that would fuel itself would slowly dissipate energy, because it has to use a measure of that to start the cycle over again. But we don't even have that. We have a big power magnet that's stopping that money, that fuel, from getting back to the beginning. And we can't keep doing that. We have to take this external factor of government and put that force into the economics that says, okay, we're creating all this energy at the top. We got all this fuel up here. How do we get that back down here? And the only fair way to do that is to reinvest in your public infrastructure, to create more jobs by creating more public facilities. You have to tax the things, and you have to redistribute that well. And our society has changed so much that we can't just rely on the old ways to do it. We're going to have to create new ways. We're going to have to create new systems. We're going to have to create new public services that are going to do a better job of everything that they're doing. And we're going to have to reinvest in fixing all of our infrastructure. We're going to have to reinvest in our education systems and hiring more teachers and building better schools. We can do this, but it's going to be up to us to make the decision, the call to say trickle down doesn't work. We know it doesn't work. It's been studied for decades. There's just no reason to sit there and constantly say we're going to put everybody else on a waiting list for our future or for an opportunity at life. And we're going to have to take charge and say everybody has the right. Everybody has a right to life, to health, to a vacation. It shouldn't just be a pipe dream. You shouldn't work your whole life to live 10 days. Alright? So, that's it. Thank you guys for watching. And if you have any questions, comments, let me know.